As Nvidia gears up to release its fourth quarter earnings report, all eyes are on its performance implications for the stock market. The impending report, scheduled for February 26th, is expected to reveal critical insights into the company's financial standing amidst a rapidly evolving tech landscape. Wall Street anticipates nearly $40 billion in revenue, underpinned by the immense demand for Nvidia's AI chips. However, looming supply chain constraints cast a shadow over these optimistic forecasts, presenting a dual-edged sword for investors. The demand for Nvidia's H100 and upcoming Blackwell chips is surging as tech titans like Microsoft, Google, and Amazon pour substantial investments into AI infrastructure. Picture a race where companies strive to outpace each other in AI deployment. The pressure mounts as supply shortages hinder their efforts. Recent earnings from major tech corporations have illuminated the troubling reality of constrained production capabilities, fueling fears that Nvidia might soon run into similar difficulties. Investors are left wondering whether the anticipated revenue targets will hold firm or falter in light of these challenges. The geopolitical landscape adds another layer of complexity for Nvidia. The Biden administration's export controls prevent the company from selling its most advanced chips to China, a market that fuels significant revenue streams. A picture emerges of a national chess game, with Nvidia's chips as pawns in a broader strategy to contain China's AI advancements. The stakes heighten as the potential for further restrictions looms, threatening Nvidia's access to a crucial market. Investors are keenly attentive to how Nvidia will navigate this turbulent environment and manage the anticipated impacts on its growth trajectory. In this high-stakes scenario, the options market is bustling with activity as traders speculate on Nvidia's stock movement predictions. Volatility mounts as analysts weigh the prospects of a possible surge versus a downside correction. Nvidia's response to supply-demand challenges and international trade policies will likely dictate the stock's trajectory. As we await the earnings report, the air becomes thick with anticipation, a moment poised to either propel Nvidia's stock to unprecedented heights or induce a market-wide shudder. The tech industry watches closely. The outcome could reshape the future of AI stocks significantly. In the ever-evolving landscape of the semiconductor industry, Nvidia confronts potential tariffs on imported chips proposed by Donald Trump, which could impose a hefty 25% tax on these essential components. This tariff presents a labyrinth of challenges for Nvidia, primarily revolving around cost management. The decision of whether to pass on these increased costs to customers or absorb them could fundamentally alter Nvidia's market strategy. Should Nvidia opt to pass on the tariffs, its chips may become significantly pricier, leading to a potential dip in customer demand. Such price hikes might steer buyers toward more affordable alternatives, adding pressure in an intensely competitive market. Conversely, if Nvidia chooses to absorb the additional costs, its profit margins will inevitably shrink, posing a risk to its overall financial health. The delicate balance of pricing strategy in response to tariffs could decide the trajectory of Nvidia's success in the coming quarters. Meanwhile, Nvidia's future growth heavily hinges on the anticipated success of the Blackwell chip, poised to be a cornerstone of the company's data center revenue. This next-generation chip, characterized by its high price tag and cutting-edge capabilities, could usher in a new era of financial performance for Nvidia. Investors are keenly aware of the timing. How soon will Blackwell chips become the linchpin of revenue? And will the market embrace the premium price associated with such innovation? Supply chain constraints also loom as a critical factor that could throttle the rollout of these chips, further compounding investor uncertainty. Among the backdrop of potential tariffs and product launches, the anticipated volatility in Nvidia's stock price creates an intriguing narrative. With options markets projecting a 7% swing post-earnings, expectations of market cap fluctuations reach an astonishing $240 billion. Though this metric suggests lower volatility than historical standards, it signifies a cautious approach from investors who may view Nvidia's performance as part of a larger strategic evolution rather than an isolated event. Compounding these factors is the emergence of new competitors like DeepSeek, a Chinese AI company that stirs the competitive waters of the AI chip market. While analysts differ on the potential threat posed by DeepSeek, there is consensus that it broadens the AI ecosystem. Thus, despite the competition, Nvidia's position remains robust, as their hardware is still indispensable for the finalization of AI models. As Nvidia confronts these challenges, how it responds to competitive pressures, pricing strategies, and tariff implications will be pivotal in shaping its narrative moving forward. Governments around the globe are increasingly recognizing the transformative potential of artificial intelligence, leading to a sizable surge in AI investments. This movement opens up new revenue streams for companies like Nvidia, especially given the US. Governments' ambitious plans in defense, research, and infrastructure projects. As these government spending policies unfold, investors are keenly observing Nvidia's stance on AI spending trends. Positive commentary from the company could signal robust growth potential and bolster investor confidence. The engagement in governmental projects could indeed translate into lucrative contracts and partnerships for Nvidia, strengthening its market position amidst fierce competition. While Nvidia has historically been a pivotal player in boosting stock market performance, its role has evolved. In 2023, it accounted for a staggering 20% of the S&P 500's total returns, solidifying its status as a market driver. However, as we transition into 2024, Nvidia's influence has seemingly diminished, contributing only about 5% to recent market gains. This shift reflects a broader change, with other sectors like retail, finance, and pharmaceuticals becoming significant contributors to stock market performance, showcasing the diversified landscape of investment opportunities. Despite the slowing momentum, Nvidia's revenue growth exhibits resilience. Analysts report a year-over-year increase of 73%, a figure that, while strong, pales in comparison to the triple-digit growth experienced in past quarters. This deceleration raises questions about Nvidia's future trajectory as the company navigates an increasingly competitive environment, striving to maintain its edge amidst others vying for a share of the AI market. As Nvidia's stock hovers just 3% higher year-to-date, the company faces immense pressure. Should Nvidia's earnings report reflect solid performance but not alleviate investors' concerns over future growth, the stock may enter a stagnant phase. The market's fluctuating dynamics and shifting investor sentiment could create a challenging landscape for Nvidia moving forward, where sustained growth and investor enthusiasm become the critical factors determining its market journey. In the dynamic landscape of technology and finance, Nvidia's upcoming earnings report looms large as a pivotal moment for investors and industry watchers alike. However, the influence of this report on the broader market appears to have diminished, prompting a strategic focus on specific indicators that could shape its implications. One critical area to monitor is the state of supply chain constraints. Nvidia's ability to meet the soaring demand for its products is paramount. Observing how the company navigates these logistical hurdles will provide insights into its operational resilience and adaptability in a fast-evolving market. Another significant factor to consider is the impact of ongoing US-China trade restrictions. These geopolitical tensions could severely affect Nvidia's sales trajectory, particularly in overseas markets where revenue generation is essential. Investors will be keenly assessing how these restrictions could alter Nvidia's global reach and competitive agility. Additionally, potential tariffs present another layer of complexity that could influence Nvidia's pricing strategies and overall profitability. The financial implications of increased costs in production or importation may ultimately sway investor sentiment and reshape company valuation. The report will also shed light on the success of Nvidia's Blackwell chips and their anticipated influence on future revenue streams. These technological advancements are at the forefront of the company's innovation agenda and are crucial to maintaining its competitive edge in the semiconductor space. Investors will also be scrutinizing government investments in artificial intelligence. An uptick in public or private sector funding could potentially catalyze Nvidia's growth, further positioning it as a leader in AI advancements. The interplay between these governmental initiatives and Nvidia's growth trajectory holds significant importance. While options traders predict a significant 7% stock movement post-announcement, it is likely that the long-term ramifications of Nvidia's earnings will unfold over the ensuing weeks. The anticipation surrounding these results will be a defining moment, not just for Nvidia but for the tech sector at large. In summary, Nvidia's earnings report promises to be a crucial touchstone for understanding its long-term strategy, competitive position, and growth potential within the AI and semiconductor industries. As we move forward, the anticipation grows. Will Nvidia exceed expectations or falter in its performance? Share your thoughts below and stay tuned for more insights.